If you don't understand what's happening behind closed doors in Washington, your entire portfolio is at risk from Wall Street's secret war on crypto. Now, while the entire market was bleeding out, a massive Wall Street trading firm was quietly getting exposed. But that's not the real story. The real story we're covering for Crypto Global News is what just went down in a secret meeting on Capitol Hill. We're talking about tax-free crypto. And by the end of this, you're going to understand exactly how this could trigger the next giant wave of institutional money into our space.
So let's just get right to the twist that really changes the whole game. A massive trading firm, Jane Street, was just hit with a lawsuit over the whole Terra/Luna collapse. And the rumor, the big one, is that they were running a sophisticated algorithm designed to do one thing, and one thing only: dump the market every single day to liquidate retail investors, people just like you.
And I mean, look at this timeline. It perfectly lays out the pattern. For months, traders were seeing this really bizarre thing happening, a huge Bitcoin dump, like clockwork, at 10 a.m. every single morning. Then, bam, the lawsuit against Jane Street gets filed. And guess what happened the very next day? The 10 a.m. dumps stopped. Cold. Just like that. You think that's a coincidence? I don't think so. But look, this market manipulation, it's just one piece of a much, much bigger war. Okay, so let's break down this first part, right? Wall Street's alleged attack on every single retail investor out there. This wasn't just some random market movement. The claims are that this was a planned, calculated strategy. Just listen to how precise that allegation is. This isn't just about selling off assets. It's about a systematic, perfectly timed dump designed specifically to trigger liquidations and to shake regular people out of their positions. Now, the 10 a.m. dumps might be over, but man, it really shows you the kind of enemy we're up against here. So now let's talk about how this all connects. Because the battle you see playing out on the charts, well, that's just a direct reflection of a hidden war that's being fought right now in the halls of Washington, D.C. This is about the future of money itself. And you know where the main battlefield is? Stablecoins. And here are the two sides, plain and simple. Over here, you've got the legacy banks. And let me tell you, they are absolutely terrified of the superior yield that stablecoins can offer. I mean, it threatens their entire business model. So it's their strategy? It's simple. Stall, delay, create as much confusion as possible. And on the other side, you've got the crypto industry trying to build a new, better system. And they are pushing hard for clear, simple rules to make it all happen. This whole fight has come to a boiling point over something called the Clarity Act. It's this proposed law that would finally give us a clear rulebook for stablecoins. But right now, negotiations are totally stalled. And why? Because the old banks refuse to compete on stablecoin yields. This stalemate has now put a super critical White House deadline in danger, and it's forcing lawmakers into these secret, closed-door meetings just to figure out what the heck to do next. And hey, before we break down exactly how the crypto industry is fighting back with a proposal that could literally trigger the greatest institutional wealth transfer in history, let me be real with you. If you are watching this without a subscription, you are missing the alerts. Click subscribe right now to stay on the timeline so you do not miss the final Clarity Act deadline. So, while the banks were busy stalling, the crypto industry launched a massive counteroffensive. I'm talking top executives from the Blockchain Association holding a secret lunch briefing with House tax staffers right there on Capitol Hill. And what they proposed, well, it's a total game changer. They laid out two core demands. First, a de minimis tax exemption, and second, a new rule to treat stablecoins, for tax purposes, exactly like you treat the physical dollars in your wallet. And look, this isn't some small adjustment. This is a fundamental rethinking of how digital assets are woven into our economy. So what does de minimis actually mean for you? It means no more tracking capital gains or losses every single time you buy a cup of coffee or make some small purchase with crypto. It totally removes the tax headache that's been a huge roadblock to mass adoption. You know, if stablecoins are treated as cash, it changes everything. And this isn't some crazy idea from the fringes. This whole push is being led by some of the heaviest hitters in the industry. We're talking Mark Andreessen and Chris Dixon from the venture capital giant A16Z. They've been on the ground in Washington, personally briefing Republican senators and lawmakers, pushing them to pass the Clarity Act to make sure America leads the next wave of financial innovation. So what does all of this mean for your portfolio? Well, when you take away all this regulatory friction, you unlock a tidal wave of institutional wealth that has just been sitting on the sidelines, waiting. We are talking about trillions of dollars. Yeah, and executives over at Securitize, which is a huge tokenization platform,
They're saying that stablecoins were just the beginning. The next massive frontier is tokenizing real-world assets, like private credit funds, and we're already seeing gigantic moves in this area from giants like Apollo and Janus Henderson. This is literally the beginning of the tokenization of everything. And when that happens, when trillions of dollars in real-world assets start moving on-chain, they're going to need a backbone. They will need a powerful system to handle those massive enterprise transactions. They're going to need enterprise-grade utility networks. When the friction is finally removed, the enterprise utility networks that facilitate those massive transactions, we're talking XRP, XLM, XDC, HBAR, and QNT, they are going to become the backbone of the entire new financial system. Listen to me. The 10 a.m. dumps are over. The tokenization of private credit is beginning. Stop letting Wall Street shake you out of your position. The real utility is coming. So, I've got to ask you, out of all these networks, which one do you think is in the best position to handle the most institutional volume? Let me know what you think, and make sure you go vote in our community post. I'm really curious to see where everyone stands on this. Which brings us right back to the most urgent point of this whole thing. The clock is ticking, and everything is hinging on one single date. So right now, as we speak, those intense backroom negotiations are still going on. But March 1st, that's the hard deadline that the White House set for progress on the Clarity Act. Whatever happens on or after that date could trigger a massive, and I mean permanent, shift in the financial world. Look, this situation is moving so fast. To get these updates before anyone else, you need to be in my Telegram. Just scan the QR code you see on the screen or use the link down in the description. It is the absolute fastest way to get this kind of intel. So with all this pressure building up and the deadline just around the corner, the real question isn't if the system will change, but when. And more importantly, which legacy bank is going to be the first to break ranks, ditch the old guard, and go all in on this new financial system. That's the story we're tracking next. Go ahead and click the card on your screen right now to see our breakdown of the top candidates.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.